Right, how's it going, everybody? My name is Antonio, and I spoke to Marc Faber this week. He's Swiss money manager. He's based in Thailand right now, and he's also the editor publisher of the Gloom, Boom, and Doom report. It's basically a newsletter where he writes about sunny days and overall stock market bullishness, but also he doesn't. He's overall pretty bearish, and he's been that way for a while now. I actually managed to ask him what had gone wrong with his predictions for a market crash that he was on a panel, I believe, in 2012 that I'd watched. That was at the end of this conversation. And then, but before that, we talked about geopolitics and specifically how some of the current conflicts in the world, like the conflict in Niger, in Myanmar, and so on and so forth, influence the investment landscape. So we talked about mining stocks specifically. When it comes down to mining stocks, I asked him what part of the globe he's most interested in, and he told me it was South America. So we spoke about South America a little bit. We talked about physical precious metals versus mining stocks and which one he prefers or which one he thinks is cheaper, and also some other topics in between. Unfortunately, he had to work, so we couldn't talk as in depth as I would normally like it. But it was still an interesting discussion that I think is worth listening to. So yeah, I guess I'll shut up now and let you listen. All right, Mark. I was thinking of making this sort of a geopolitical discussion, if you will, where we tackle some of the larger conflicts going on in the world. And as I note them, there's basically five that have caught my attention the most, or at least recently, mainly because, of their relationship to commodities, natural resources, if you will. And so that those are being the conflict in Eastern Europe, obviously, for its effect on soft commodities and oil. Then the one in the Middle East, again, for its influence over the oil price. The coup in Niger is interesting for its influence over France's uranium supply and maybe just the entire Sahel district or the Sahel belt, which is very tense right now, but also full of natural resources, so oil, gold, and whatnot. Then there's the Armenian-Azerbaijan conflict, not talked about out there, but it could have complications for the new Kazakh transport route, again, for uranium out of Kazakhstan into the West. And then there's the domestic war in Myanmar, close to the Chinese borders that you would obviously know. More specifically, the conflict in the WA state, which is a large global producer of tin. Tin is, by the way, for people listening, used across different technologies, so important as well. So, Mark, first of all, thank you for being here. But if you had to rank them on a scale of importance, which conflict would you rank the highest and why?
Well, I think it's difficult to rank conflicts by their importance because what is a small event can grow and explode. But my sense is if you look at all the conflicts we have in the world, a basic theme is we had over the last 150 years or so a Western hegemony in terms of military might and also political power, as well as economic power. And we had this organization which came up a few years ago, the BRICS countries, and they are now being enlarged. And the BRICS countries are not the Western industrialized countries, but less developed, but faster growing economies. And population-wise, the BRICS and their so-called allies and observers and so forth, they're close to 80% of the world's population. So as they have a lot of people, and as their economies have been growing rapidly, they are opposed to the policies of the Western democratic countries of Western Europe and the US and its allies in Australia and Canada and so forth. So we have the rising power of China and India and, population, numerous countries like Pakistan and Indonesia and Bangladesh and so forth. And you have the Western countries, and that creates tensions everywhere because it creates new trading routes, new business opportunities and new business allies. If you just consider China used to consume in 1970 just 2% of global industrial commodities, and now it's around 50%. This is a huge change in a short period of time, and people don't understand this, that the trading routes, or the trade between Saudi Arabia and China has exploded, as well as trade between Africa and China has exploded. And it's a competition to the Western nations, and the Western nations, through the arrogance of their and incompetence of their governments, don't understand that this means that a lot of things are changing. So they respond poorly, and therefore you have rising tensions in Africa, like in Niger, in Niger. You have certainly the France losing essentially the country and losing the influence in the country. And I'm sure that France will lose most of its influence in Western Africa because of foreign powers, and because the locals don't like the governments that France had installed in their countries and financed in their countries, because these people were working to a large extent for French interest and not for the interest of these countries' population.
Mm.
So if you ask me, where is the big problem, I think this Hamas Israel conflict is also a big problem, because the Muslim population in the world is very large. And whereas before the Muslim population was concentrated in the Middle East and in North African countries, nowadays the Muslim population is very large in France, and it is very large in America and in Europe and so forth. So it's no longer just a conflict in a narrow region of the world, in Palestine, but the conflict is real also in our Western democracies.
Mm.
And then we have the potential conflict between China and Taiwan. I want to stress here that neither Taiwan nor China want the war, but the neocons in the US, they may want the war. They are the ones that kind of nurture the tensions. The Asians don't want the war.
Hmm.
Do you know what is the most important? I wouldn't know. But combined, it has an impact on the global economy, and it has an impact on the displacement of people. I mean, it began already with the invasion of Iraq and Afghanistan. A lot of people are displaced, and they flood into Europe and essentially upset, or it's difficult to describe, but they render societies in Europe unstable.
Hmm. If we were to zoom in on the Niger conflict, to me, that's an interesting conflict, because I am a uranium investor myself. Niger is not an insignificant producer of uranium on a global scale, but specifically for France. You say that France is losing their influence there. Do you think they've lost it, or is there just a possibility they're going to lose it?
I think they lost it. It doesn't mean that some companies in French companies that operate in Niger, that they lose their assets, but the influence is gone. And it's logical that it's gone. China is now by far the largest user of African resources, and they are also building the infrastructure in Africa. So the influence is very significant. And they're buying resources, and they can supply the Africans with cost advantageous goods. In other words, they can sell them cars, they can sell them electronics, and so forth and so on.
Mm. Do you think the coup in Niger represents an investing opportunity, sort of a be greedy when others are fearful type of situation?
I don't think it has much of an impact on the investment world. But I believe that the BRICS bloc, and they have included new countries into BRICS that are of strategic importance, that this is an important event. This is the rise of the poor world vis-a-vis a relative decline of the advanced Western industrialized nations. I think that is a very important development. And if you look at the conflicts that we have nowadays, it would seem to me that the UN is an obsolete organization that should be dismantled, has no function anymore.
Right. I was mostly referring to specifically the companies that operate within Niger. So there's a few uranium explorers, soon to be developers that operate there. A couple of other companies too, not very many. But it was maybe more of a philosophical question. Like, would you go to a point to a country that's currently going through a unrest, a coup, a war, whatever it might be, and sort of, buy the cheapies, as they call them?
Yes, I mean, but I'm not familiar with all the small companies that operate in Niger. But if you're an expert, then I would think that the valuations have declined as a result of the coup. So it may be an opportunity to make some investments. There's a French company, Euronet or something like this.
The French company over there is Orano that's operating there. They used to be called Areva, so they are the uranium producers. Yes. But it's not a public company, so they're not. I mean, it's not investable.
Okay.
But so my point was more. The question was more about how do you measure the risk of the situation there, so that you can have an outlook as an investor and think of, is the risk worth the potential reward?
Yes, that would depend on the valuation of the asset. If it's very cheap, then I would maybe invest in the asset. But maybe there are easier ways to make your money than to go to Niger and then invest in these companies.
Do you have any specific insights on what's happening in Myanmar, though, with the war that's now approached the Chinese borders?
It's a complex situation because the different, what we would call tribes or domestic people, and they're very different from the south of country to the north. And it's in the north, a high altitude country. The highest mountain is, I think, about 6,000 meters above sea. And in the south, it's the sea level. So there are different, they can never agree on a common government. The best would be to have a multitude of states that are sort of independent, but that doesn't work very well because some would then become part of China or be very close to China because of their, ethnic relationship. Because during the Communist Revolution, a lot of Chinese fled to Myanmar and they populated the north of the country, and so they're ethnically Chinese, as well as some other people that moved just in the course of immigration of the Chinese to Southeast Asia. So these ethnic groups, that they will all agree on a common government would be very difficult.
It's also families that control mining companies and other businesses in the region are also involved in the conflict, and that makes it even more complicated.
Yes, I know a general, and he used to come here regularly to Chiang Mai. He's a Christian and very nice person, very influential family. But now he hasn't come for 2 years. I don't know exactly what happened to him. But I will try to contact him again. But when he's in Myanmar, he doesn't respond to my emails. He may not get them. But he's an active general, and he was the son of the general of the Shah, the current state.
So what interests me specifically within that conflict is the fact that they have stopped producing and exporting tin. In preparation of that event, global tin stockpiles, above ground inventories were increased, so we were prepared. The prices stayed subdued under that. But I'm just wondering, how quickly is that going to get resolved, and are those families going to go back to operating the mines soon enough so that we have enough supply?
Yes, but you're not sure that they have stopped producing, because they may produce it and sell it to China, and you may not know about this.
That's a good point. Yeah.
Unless you go, this is precisely the point. At the present time, it's very difficult to travel around Myanmar.
It's true. Yeah.
I'm not saying it's impossible, but I haven't tried. And I think it is difficult to travel around the country.
Have you been to Myanmar?
Yes, I've been many times, but before the war now.
Right. I tried in 2016. I was actually in Chiang Mai, where you're right now. And so we tried getting into Myanmar, but they wouldn't let us. It was me and my wife, just the two of us. And they said that there's a certain number of tourists that they let in every day or something like that. I mean, it's not a real reason, I suppose, but they wouldn't let us go in, even in 2016. So.
Well, you didn't make the proper contribution to the pension
That's
fund.
A good point. Yeah, I made a lot of contributions to the police, though, on my way there, because we were in a moped. Anyways, long story. Is there a world, Mark, in which you see all of these conflicts amounting to nothing and just disappearing within a reasonable period of time, and us returning to the regularly scheduled roaring 20s?
No, I don't think we will go back to the roaring 1920s, nor have we been recently in the roaring 1920s. We were in a boom period in the global economy, say between 1980 and about 2007, 2008. Then we had the great financial crisis. And after that, the global economy was not in the same condition it had been before, because of the debt overhang. And from there on, the global economy expanded mostly because of money printing and fiscal deficits of industrialized nations, and some genuine growth in China. But the genuine growth in China has slowed down, and it's never going to be around 8% per annum the way it was in the boom years. Now the Indian economy could grow at around 6-7% per annum, but it may also be interrupted at some point. So the outlook actually for the global economy is not particularly favorable. In terms of investments, I think the returns will be sort of disappointing in the next 10 years, because our valuations are still high, with the exception of the valuation of equities and bonds in some emerging economies. But by and large, valuations are high. Now, you may turn around and say, well, valuation of commodities is very low. Correct. In the case of agricultural commodities, I would agree with that. But it's difficult to value something precisely. And my sense is that they are relative values, but most things are adequately priced. Say, if you look at the price of gold in 1970, it was cheap. But nowadays, the price of precious metals and also of other commodities is relatively attractive, say, compared to the S&P 500 or so. But it's not cheap, unless you have World War III. World War III, all commodities will be in short supplies.
Well, but you mentioned China, though, and I suppose China might disagree, because they've invested over $10 billion in the first half of this year alone within the BRE, the Belt and Road Initiative. and mostly South America and Africa, and also in troubled regions. Why do you think? Why do you think they're going that aggressively if they're not going to grow the same way, or if they don't think those projects are cheap enough?
Well, first of all, I would not necessarily invest according to the Chinese corporate sector and the Chinese government. But that aside, when communism fell apart in China and also later Vietnam and other countries in Eastern Europe and Russia, there was a catch-up effect. People had a huge demand for consumer goods and to achieve the lifestyle of their Western counterparts. And so these economies moved and developed very rapidly. But now the Chinese economy has reached a kind of a high standard of living, and the high price level is nothing cheap in China anymore, except stocks. Stocks are cheap. But the population of China is no longer growing. There are different theories about the decline in the population in China, but it's likely to decline meaningfully over the next 20 years, meaningfully. I mean, more than 10%. Some predict 30%, some predict 50% over the next 30 years. That I don't know. But it's not going to grow at the same pace. Number two, most Chinese by now have an apartment and the roof over their heads. So the housing market, boom, will not come back. It's like housing starts in the US today are lower than in 1973. Nobody can dispute this statistic. But the population of the US is 50% larger than it was at the no. In 1970, the population was 200 million. Now it's 340. But the housing starts have not reached the level of 73. So in China, it could be that the housing boom is over for a long time. Now, can we have a housing boom in India? Yes, it is underway. But to the same extent, maybe not.
Okay, sure.
But look, if you want to tell me that you're optimistic about the global economy because of the Belt and Road project and other infrastructures in Africa and so on, I do not argue with you. It's possible. But I'm arguing that the roaring 20s are not ahead of us. That I'm arguing because the debt level is so large.
I'm mostly focused on commodities and the fact that China is putting so much money in
because you're a commodity guy. But the commodity prices ultimately also depend on the demand. And if we have a slowing global economy or a recessionary global economy, then the demand for industrial commodities will not be very high. But I focus more on inflation. I think the governments will have to print money again, and then commodities will be relatively favorable investments. But I'm not as wildly bullish about industrial commodities as you seem to be.
When you mention industrial commodities, what are you talking about specifically? Copper, iron ore, coal?
No, gold would be precious metals as well as silver and platinum, whereas the industrial commodities would be zinc, tin, copper, aluminum, bauxite,
right,
iron ore, and so forth.
Right. But so the fact that China is putting money into that's not necessarily telling you anything about the commodities market. It's more telling you something about China, as far as I understand it.
The increase in demand from China has been gigantic. I don't think this gigantic increase from going of 2% of global industrial commodity usage in 1970 to now, in some cases, over 50%, that this will be repeated, and that will go from 50% of the global market demand to 100%. That I don't believe. I think the demand from China which is still largely infrastructure dependent, will not collapse, but it's not going to expand at anywhere near the rate it expanded between year 2000 and 2010 to 15.
What I'm mostly focused on is like, okay, if that's not going to happen, then why are they spending all that money investing in natural resource projects in, again, troubled regions?
They invest in a lot of resource assets. I used to be a director of Ivanhoe Mines, and the Chinese have a significant investment in the company, because the Chinese, their Achilles heel, their vulnerability is access to resources, access to oil, access to iron ore, to copper, and so forth. So they want to control these sources of the metal.
Sure, but why? Basically, they've got a whole lot of domestic production of a lot of things. They remain the largest consumer of commodities worldwide. So if they don't expect growth themselves, why would they want to control it?
Well, for security reasons, for instance. Number two, I didn't say they wouldn't have any growth at all. I said, if you expect the growth rates to be the same going forward as it was between, say, 1990 and year 2010, you're dreaming. It's not going to happen. The rate of increase will slow down. I don't know any growth curve that didn't slow down.
Okay. Fair point. You mentioned that you were on the board.
And I mentioned the housing market was a big user of steel and cement and so forth and so on. The housing market will continue to be, they will continue to build buildings, okay? But not at the same rate of increases.
Right. Okay. Yeah, no, I get that point. And you, just to go back to a point before I forget it, here that you just made about you being on the board of directors of Ivanhoe. You were on the board of many different mining companies, I believe, up until 2017, and then you left. What do you? What do you
I
think?
was kicked out.
Yeah, well, I know I didn't want to put it that way, but it is what happened. You're right. You were kicked out because of an interesting blog post that you made. Believe it or not, these things happen. Do you have any insights on the workings of the mining industry and the capital markets that finance that mining industry that you can quickly share with me? I suppose that would be an 8-hour conversation in and of itself, but some insights are welcome.
Yes, my sense is that the investor has a choice, as an example, to buy physical gold and store it in a safe place, whereby what is safe in this world? Nothing is safe. Or he can buy stocks. In general, you can also buy a property, an office building in San Francisco, or you could buy a company that owns the office building in San Francisco. So what is better? Well, the times when the physical is more appropriate and the times when the financial asset is more attractive. Say, when it comes to properties at the present time, Hong Kong property stocks are much cheaper than to buy the property outright, because they sell at a discount to asset value. And if I look right now at precious metals and at mining stocks specifically, my sense is that stocks are cheap compared to the physical. I have most of my assets that I invest in precious metals in physical form, but I think stocks are now cheap. In other words, if the gold market moves up, and if platinum and silver move up, the shares will move up much more than the underlying physical gold, silver, and platinum.
Right. Sure. Well, what stocks are we talking about here? Producers, developers, explorers?
Well, someone like Barrick would be an explorer and a developer and a producer all at the same time. Now, you have, of course, purely exploration companies, but it's difficult to tell which one is the best. But you, with your expertise, you can maybe tell.
I wish. I've been trying though, but I'll tell you, my wife is not really happy
so
about me
I'm
trying.
not giving interviews to give stock tips.
Sure.
I'm just trying to explain. In my view, right now, it seems that the shares of gold miners are relatively inexpensive.
Sure. Okay. That's good enough.
The physical is, I'm not saying that the physical is expensive, but it's more likely to be fully priced than the shares of companies.
Yeah, no, I get that point. Well, we talked about the world being in a troubled situation, many parts of the world too. What part of the world would you feel most comfortable deploying capital in when it comes down to mining shares of stocks?
I think Latin America would be in a conflict situation, relatively insulated, because the conflict zones would be Eastern Europe and the Mid or Near East, and then maybe conflict situation. There may be some conflicts in Africa, and some conflict could be in the South China Sea, East China Sea, and in the north of China. So I feel that Latin America would be relatively safe.
That's from a world conflict perspective that I do get. But what about the watermelon governments of South and Central America, where they appear green on the outside but are mostly red on the inside? What do you say about that?
Yes, that is correct. But it's interesting that you have families in Latin America that have been wealthy for a long time. They somehow manage. Actually, inflationary policies of these governments are always favorable for rich people, not for the poor. So, I mean, I would not put all my money as a free human being into Latin America, but I would have some investments in Latin America for the simple reason that Latin American markets are cheap, especially Colombia, Brazil, and to some extent Argentina.
Okay. Are you talking about Canadian companies operating in those regions, or specifically?
No, I'm talking about local companies and international companies.
Okay. Yeah, because that's what I got
don't
out
have
of
a focus on Canadian companies. I'm an international investor. So if I buy a Brazilian company, it could be Petrobras, or it could be a local milling company or agricultural company and so forth. So anything, not necessarily international companies.
Yeah, not necessarily Canadian companies, yeah, but also not, okay, makes sense. But sometimes, it seems like, unfortunately, Canada is also moving towards that watermelon government that I said. Does that concern you for the companies that are operating within Canada too?
Well, this is a concern I have for all companies in the world, that and for this reason I also mentioned that investors will not have the heavenly condition they had between 1980-81 to year 2021 in terms of rising stock prices by and large. I think the environment for investors is going to be relatively unfavorable, partly because of the acceleration of inflation and continuous uptrend in interest rates, whereby these long-term trends will be interrupted from time to time. In other words, for the next 6 months, we could have falling interest rates, but in 10 years' time, interest rates may be much higher than they are now. So there are cyclical fluctuations and long-term fluctuations.
Sure.
But the governments are becoming bigger everywhere and more incompetent. The champion being, of course, Canada. This is now by far the worst government I have seen compared to before.
Why?
Well, just listen to anything Trudeau says. To all the Canadians I socialize with and drink beer with, they can't understand that this character is ruining their country. Well, and the tragic part, when I went to school, I was always told, oh, democracy is the best system because we are free, we can vote. Now we have seen what a fraud democracy is. We have the worst autocrats, the worst dictators at the top of nations, like in Canada. What they did against the truckers is, incredible. Yeah. And the population is completely complacent. They sit there and do nothing.
What I'm thinking about is when it comes down to the companies who have assets there and are operating exploration, development, or mining projects there, will there ever be appropriation of those assets, or do you think it will mostly manifest in growing red tape for Canadians and Canada as a whole?
Well, this is a good question. At what point will the government steal money from the people? They've been stealing money from the people for the last 150 years, and it will likely increase. Money printing, by the way, is a fraud. Is stealing the money from the people by essentially depreciating the value of money.
Right. Yeah, money printing is a form of a tax. That's something, I don't remember who told me that, but it was in one of those interviews. Someone explained that to me, that money printing is basically a tax. Inflation is a tax, and inflation comes from money printing. So it made sense to me.
Yes.
And so it's not only at what point will the government steal the money, because they have been, and there's different ways, by increasing red tape and creating new meaningless jobs within the government made to make the life of mining companies even more difficult. The question is really, how is that going to happen? How are they going to steal from me as an investor?
Well, they can tax you. They locked you in. They forced you to take a vaccine. They can take your money away. But at some point, there'll be social unrest. But I'm just suggesting that global growth will not be as strong in the years to come as it was in the past. You disagree with that? That's fine with me. But I'm mentally prepared to have an investment environment that is not very favorable, because I can see the incompetence of the governments we have in the Western world. And we are at this stage, simultaneously as we are at the stage of very high debts in the system. So this reduces the ability of governments to maneuver through a crisis or through hardship. I mean, I think the whole monetary system, the fiat money sort of system, will collapse one day. But don't ask me when. I wouldn't know. But I mentioned to you I would have a diversified portfolio of assets, and I would have some precious metals in physical form. I think there's some commodities that are cheaper than precious metals, but it's for an individual difficult to store.
Right. And it's so I don't, to clarify, there's nothing that I don't think I have the brain capacity to disagree with you, first of all. But second of all, I'm not necessarily disagreeing that there would be more growth than what we've seen before. What I'm thinking about when it comes down to commodities is really the supply side of the equation, where we've underinvested in finding and building mines. And that's what's really pulled me into the commodity space. So I'm not disagreeing with you.
Yeah, understand. That is correct, that the investments in commodities hasn't been huge. But this is a theory that, the miners like to tell. My theory is a mine can be used in different ways. It can be used more efficiently and less efficiently. And two, there is substitution. We discover all the time new materials and new applications and technology. And the modern human, he needs less commodities than, say, your parents or grandparents. That I can also see. There are some sectors like food where the global demand will grow as people want to eat more chocolate and drink more coffee and so forth. Whether they will use a lot more oil, that I'm not sure. Because the solar can have some impact. But of course, to produce the solar panels and so forth, you need also oil.
Yeah. First of all, and then second of all later.
So anyway, I'm of the view that commodities are cheap vis-a-vis financial assets. This is not the issue. That we can all agree upon. We can also see this in the market weight of the resource sector in comparison to the S&P or in comparison to Apple or the FANG stock complex. But I wouldn't be overly bullish on the sector. I'm positive, but not. I'm not a believer in gold at $10,000 an ounce in the next 6 months. You understand? The super bulls on gold and the moderate bulls. I consider myself to have done my part because I have told investors to buy gold for the last 40 years.
There's been, there's a lot of things happening around that, because there's, so the newsletter that you write, it's called the Doom, Boom, and Gloom newsletter. So it's I mean, you've been bearish for a while now. You've also been expecting sort of a 1987 type of crash, I believe. I found an article from 2012, I believe, or something along those lines, that you were expecting that. And that's not happened yet. Do you still believe that's going to happen? And what do you think? Why do you think it's taking that long for that kind of a slowdown to occur?
Well, you see, I wrote, first of all, not as an excuse, but as a statement of facts. I was bearish about the market in 2006, 2007, net back. But to my credit, on March 6, 2009, at the low point of the market, recommended to box in an interview. So when someone tells me, well, you had an interview in 2015 and 2012, I may have referred at that. I did not expect the market to move as high as it eventually did. And I didn't expect meme stocks and SPACs to explode to the levels they exploded to in November, December 2021 and January 2020. All I can say is that I was on the Barron's panel for 12 years. And someone measured the performance of all the panels over this period of 12 years. And I was the best performing fund manager at the time.
Okay.
So the track record is, I think, okay. But the question about why the economy has held up so well is the government its fiscal deficit and keeps on printing money, you can postpone, you can kick down the can for a long time. I mean, in Istanbul, if you go around, you will walk around the sitting functions rate of 100%. But everything functions.
Sure.
It doesn't function very well for poor people, but for the wealthy people, it functions.
Yeah, that's something that I've heard you say before, that pretty much the only way to save yourself in this kind of situation is to be a creditor and not a debtor. And when you're a creditor, inflation, all these things work for you. I often think about, as I've been early to a couple of commodity stories, and I often think about what's the difference between being early and being wrong. Because if you're 10 or 15, or I mean, if I understand what you're telling me here, and I appreciate where you're coming from and your experience and all that. But what if it takes another 20 years to unfold, or 10 years, and the stock market does another 4 or 5x in the meanwhile? There's an opportunity cost in that has some sort of an economic value. That's something that I think about and don't know how to deal with.
Yes, but I have advocated, and it's also written in the book that I wrote in 2000, essentially about tomorrow's the rise of the Asian economic bloc. Diversion. So you have some money in stocks, and you have some money in bonds and cash, and some money in precious metals, and some money in real estate. So I have never said don't own any stocks at all. I've always maintained, it's a question of what own, how much you own. But I think that people who bought stocks on leverage, the meme stocks and so forth, they must be horrible. And we have statistical performance of individuals in the stock market. I tell you, not what the S&P shows.
Right. So I don't assume
people who think that the individuals, that the traders in the stock market, that they think they will earn or beat the S&P, they're dreaming. We have precise records from Fidelity of individuals who buy and sell stocks through Fidelity. They have a representative list of clients who can trade free of charge. Their record is horrible. It's like 2% per annum.
Still better than mine, but
it's anyway, look, I will need to leave you now because once in a while I need to work.
Okay. Yeah. Well, that's what my wife tells me. I never listen. I appreciate the conversation, though. I'll leave a link to the Doom and Gloom newsletter. Thank you so much for sitting down with me, Mark.
Yes, my pleasure. All the best.